Welcome back to 30 Deals in 30 Days. We are live from Cancun, Mexico. Today, we're going to be diving into what seems like a pretty interesting challenge that we've got from Michael up in New York, just outside of New York City. Excited to dive into that one. Guys, if you are not familiar with the 30 Days, 30 Deals Challenge or 30 Deals, 30 Days Challenge, I'm going live every single day, 30 days in a row, underwriting commercial real estate all over the country, deals that you all are submitting to me through the 30 Deals, 30 Days chat, and seeing if we can make them work. That way you guys can get a better understanding of how to actually underwrite commercial real estate and hopefully go find some deals in your markets. So let's pull up our chat and see what Mike has for us. All right, so he's saying, "Hi, Tyler. Hope all is well. My name is Michael, and I'm a commercial broker in New York. See if you can help me underwrite this strip retail 5 stores. The seller is 82 years old, and I'm trying so hard to convince him to sell for $1.25 million. There's the location there. It's up in Hewlett, New York. 2 of the stores are vacant, so I guess 2 of the 5. Total square footage is 5,000 square feet, so it seems like average 1,000 square foot per door. Comps are between $45 to $50 a foot on the rent. Taxes annually are $40K, maybe $150K in light rehab. It's an off-market deal." All right, this one will be fun because we don't have any other information. There's no listing. There's no, flyers for us to dig into. We're going to have to come up with everything on our own. So this would be very similar to you guys if you go out and you find an off-market deal. So first, let's go ahead and Google this address and see where we are. All right, looks like a pretty decent area. You've got some bit of residential around you. Looks like you've got a high school down over here, a park, some baseball fields, not far from a golf course. Looks like you're in a pretty heavily residential area, not too far from what seems to me to be probably the quote unquote downtown of this area. I mean, we're talking, just a few blocks from it's a smaller area, but major commerce for this neighborhood. Man, these roads look like a lot of fun to deal with. All right. Let's get down street level and see what we're looking at here. So it looks like you've got a hair salon, an ophthalmologist, facial bar, nail spa, and then musculoskeletal care. So you got a doctor, and then I can't tell what this other one is. High voltage tanning center. So it looks like the tanning center is closed. I wonder which other one is closed. We'll click on these on the Google Maps to see. Well, it looks like they're all, other than the tanning salon, they all have active Google My Businesses. Now, that doesn't necessarily mean that they're open. And it's not necessarily going to change anything. I mean, I like the look of this building. It's a nice little retail center. Now, it looks like you're on a relatively busy thoroughfare. Gourmet sweet tea across the street. Some townhomes, apartments. Seems like a pretty nice little area. I love that we're on a corner. Looks like you've got some parking out front. I wonder if there's some parking around the side over here. It is New York, but we're in the suburbs, so you need parking. So there we go. There's some parking in the back. Looks like you've got some rear access to probably every suite, what it seems like to me. See if there's anything back here that stands out as maybe a potential issue. Parking lot seems like it's in pretty good condition. Sidewalks seem relatively cared for. say all in all, I mean, brick facade and everything, this seems like a pretty solid building. Let's see if we can see the roof. So this isn't going to give us a great idea of the current condition of the roof, but I could say this one looks newer than this one. And technically, you have three separate roofs here. That can be nice, depending on your approach. You know, if there's a leak over here or this roof fails, you don't necessarily have to replace the entirety of the buildings. You just go focus on that one. There's nothing now. Let me see. I can see what date this was taken. Yeah, it's hard to tell. I mean, they seem to be in relatively fine condition. It's holding some water right here, like these black spots. That's typically where like the organic materials have gathered because there's water sitting there. So may just be some softer spots, not necessarily a problem, but something to keep an eye on for sure. And then it looks like this building might have, oh, this might be a totally separate building. That's right, because he said there were 5 tenants. So 1, 2, 3, 4, 5. Okay, so it's just this white brick building. So not this doctor's office here. Okay, that makes sense. All right, we'll zoom out right here. It's a nice little apartment complex. You got the baseball fields. Let's see. More medical apartments. Yeah, this is kind of the downtown district over here. Oh, you got a Trader Joe's. Look at that. That's always a good sign. If you follow any retailers, what's incredibly picky about where they go. They are notorious for being difficult to get them to open up a new location. Ask any Nashvilleian. There are certain neighborhoods that have been begging for a Trader Joe's for years. And I hear, can you go get us a Trader Joe's? And like, yeah, I mean, I think Trader Joe's would probably crush it in East Nashville, but it took them forever to open up a second location in this city. So I think it's going to be a little bit. You're basically across the street from the high school. So, there could be a built-in clientele there. All right, seems like a pretty decent opportunity. Let's go to Crexy and see what's going on in the area. All right, so we'll go to Hewitt. Double check that address. So yeah, we are on Broadway. So we're right about in here somewhere. So you got office going for 1.2. You get some industrial, what they're claiming to be industrial. Seems pretty close to town. So this might not be completely built out, but it could be an interesting comp. Simply because, how many square feet is it? 6,200 feet. So not far off from what we're looking at. Definitely needs a new roof. Or as close to it. No pictures inside. You got some aerials. The exterior. Will we get a picture inside? There we go. Yeah, I mean, kind of what you would expect. Not super industrial, though. Definitely industrial. But, I mean, you could see somebody putting some money into this and it easily turning over to office or retail. It wouldn't take much. Okay. Now, keep in mind, they haven't gotten that price yet, right? So it's not technically a comp. But if they get it, that's $649 a foot. That would put this building, which is 5,000 feet, at 3.2 million. That doesn't sound right. Wait a minute. So 1.1 million divided by 6272 square feet. It's $175 a foot. I don't know where this price per square foot is coming from. That's very odd. So that puts it at $175 a foot times 5,000, puts us at about 876. So remember, Michael was saying he wanted to get it for about $1,250, which is about $400,000 more than what this would comp out at. That would make sense if you've already got a building that is built out for retail and has tenants in place. Okay. Unfortunately, there's just not a lot for sale in this area. Let's remove the boundary. See if we can zoom out a little bit, find some more. We'll go to just retail. All right, now we're pulling up some comps. Let's get to stuff that's closer in size. That way we can start to eliminate this. So max square footage, probably 10,000 feet is going to be the closest comp. It's got to be at least 3,000, I would assume, for this to make any sense. All right, let's check this one out. So they're asking $202 a foot for this one. $1,750,000. It's 8,600 square feet. Looks like it's got similar setup. Some parking in the rear. This one appears to be 2 stories, however. Maybe a single tenant with the veterinary clinic. Oh, very well built out. So you could definitely justify a higher rate per foot on that. I mean, that's medical use, right? I mean, since it's a vet's office, it could very easily be converted. Still expensive, but you could convert it into some other type of medical use if you didn't want to find another vet. Nice that they've got floor plans on here. So yeah, multi-story. Let's see what they say about it. Nothing really. Maybe there's something in the OM. I've got to sign a confidentiality agreement. Unfortunately, we can't do that, guys. I would immediately be violating that. Live streaming this on YouTube. All right, let's see what else we got. This one looks almost identical in terms of size and scale. Yeah, look at that, 5,019 square feet. Looks like it's 3 tenants. They're asking $1,890,000 for this one. Better be some serious income here. It's a big jump. Oh, don't even have a flyer. It's a big jump in the price per square foot. I mean, if we're talking $1,890,000, puts it at $376 a foot. This is Hempstead, New York, so I guess that's a little further away. Where is Hempstead on this map? Okay, up here. No. Okay, well, let's see if there's anything. Oh, nope, no info. And it's listed by a residential agent. Guys, this is why I always recommend, if you're going to do anything in commercial real estate, always work with a commercial real estate broker. They understand the right way to go about approaching these sales. So, I mean, if I was interested in buying a building like this, I have no information on it. Got some pretty pictures, and that's it. There's nothing else I can learn from this listing. Okay. Well, we'll drop that one. This one could be interesting. Rockaway Avenue. 3,400 square feet. Appears to be the building on the corner there. Looks like you got a retail shop in there now. Clothing store. Looks like a nail salon. All right, let's look at the flyer. All right, solid, all brick, 3-unit commercial building, sitting on the corner, excellent exposure. 3 units are fully occupied, providing immediate cash flow from day one. It's always a pretty aggressive comment to make. Immediate cash flow. I mean, I guess if you're assuming somebody's paying cash. Taxes are $20,229. So 20,229 divided by 3,420 square feet times 5,000. Yeah, that's at about what Michael had said their taxes were. Let's see. He said they were what, 40K? So that comp would put it at 30K. So I wonder, I mean, it's a different township. That could explain that. We don't have any other expenses on here, though, unfortunately. Nothing else that we can really gather. All right. Now, remember, excuse me. All right, remember, Michael told us that everything was leasing for like 45 to 50 bucks a foot, I believe is what it was. Yeah, 45 to 50. Let's go confirm those comps. We'll go to for sale, for lease, retail. And we'll zoom in just a little bit so I don't have so many spaces to look at. Undisclosed, 1,150 square feet. This is a size comp. It's over in Hempstead. Seems nice enough. I mean, I would imagine if we put some money into the space, ours is probably going to look the same. So 348 times 12, that gives us $41.76 a foot. So that about falls into where Michael was saying the comps were, just below. A lot of undisclosed rates on here. A lot of brokers that don't want to do the work. All right, this one's also in Hempstead. No other pictures. Let's see if the brochure is a real brochure, if it's just what Crexy generated one. Yep. Crexy generated one. So that gives us absolutely nothing. All right. This one's 320, no pictures either. $36 a foot a year. All right. I'm not seeing anything that's really comping it out. I mean, here's one that's over in Lynbrook, which is right here. at $50 a foot, but that's the first one I've seen that's really at that point. That's for 1,500 square feet. So, I mean, that's a good comp. That's the one we were looking at. It puts us at 41. This one, that's $50 a foot a year, roughly. Not very nice looking, a little bit smaller, but pretty close in size. So based on what Michael said and then based on the comps that I've looked at, I would actually give it probably a broader range, maybe $40 to $50 a foot. Triple net. Let's see. If we can start underwriting this one. All right, so we're at 5,000 feet. He wants to buy it for $1,250,000. Capitalized rehab. Michael said he was going to put about $150,000 into it. Closing costs. Well, purchase price is wrong. You got to fix that. $125,000 would be great. I'm sure Michael will be very happy about that. $25,000. Closing costs. Remember, I always just try to get to about 2%, give or take. Down payment, we'll put down 25%, interest rate of 7%, term in years. Now, what I'm going to have to do is underwrite to what I think that we could start leasing this for, because I don't know what the current units are renting for. We don't have that information in here. I have some of the expenses. I have some of the rehab, but we don't know what the current tenants are paying in rent. We don't know how long those leases are. So what I'm going to do for now, again, remember, we always do like a first blush of underwriting, right? First pass. I'm going to make the assumption that I'm just going to buy this today. I'm able to knock those tenants out. Maybe they're month to month, and I can start renting it for what I need to rent it for. So let's assume $40 a foot just to start. We've got 3 spaces occupied, so I'm not going to go through, everything aggressively day one. Maybe we get it, let's say we're probably 25% vacant year one. What I'm doing with that vacancy, by the way, is saying I'm kind of combining my rate here, because I'm assuming that we're probably going to have to give a discount at some point for what the current tenants are paying. And we've got 2 out of 5, so 40% vacancy right now. So I'm assuming it takes us a couple of months to get at least one of those leased up. We get the next one leased up by the end of the year, and we stabilize at about a 7% vacancy rate moving forward. All right. Coming down here to the operating expenses on the square footage. So we knew we have $5 a foot in property taxes. We've got insurance is probably another $1.50 a foot, I would assume. So we're at $6.50 a foot there. And then there's not a lot of common area, so not a lot to really have to maintain there. You've got property management. Let's just say that we're all in at $7 a foot. So we'll drop that in. Now, remember, it is triple net, so we're going to be passing these off to the tenants. But this first year, we're going to be covering 25% of that. So I'm going to do this equals 7 times 0.25. So we have to pay for $1.75 of that. And then this will equalize out, I would assume, at probably 50 cents ongoing. Maybe 75. I'd do that because you're going to have some asset level expenses that you're just going to want to get paid for, right? Maybe that covers your accountant for the year. Leasing commissions. I think we changed this up yesterday. Maybe we fixed it. C54 times Z61, which is our total 5-year, times 1 minus V56. So that first year, we're not actually going to have that much in commissions. That's assuming that it's completely vacant. I'm actually going to multiply that by, we have 0.2 times 0.2, because that's one tenant would be 20%. All right. So that would be our commissions for that year. And then we're going to pay roughly the same thing again the next year. So I'm actually going to leave that. It'd probably be closer to this, 12,700 number, give or take, depending on the terms. That's close enough for now. Now look at that. We hit our debt service coverage ratio in year one. I mean, if we get it for 1.25, then this sounds like it'd be a pretty good deal. Now, again, this is assuming that we're blending a rate of $40 a foot triple net on these assets. And I don't know that we could do that yet. I haven't seen the leases, right? That's the big unknown at this point. So that's good. I mean, that says, hey, this deal is going to work out pretty well. All right. No asset management fee, because we're not going to raise capital for this one. It's a smaller deal. Capital reserves, I'll keep it there where it is. Look at that. We cash flow 8%. Then as soon as we were fully occupied, it's cash flowing a lot. 7.5% cap rate, I think, seems fair. Brings us to, we're basically 6xing our money. We're making 100% of our money every year. Now, that's not entirely realistic, right? Because we're probably going to be inheriting tenants that are paying maybe even $30 a foot. So what if we're blending at 36? Passing off the expenses, we get to 100% occupancy. Double checking everything else. All right, there it still starts to work really well. Now, I do want to check, just because this is a bit of an anomaly, how do we go from 4% cash on cash to 16 to 20 and then level out? Right, we always want to double check our expenses if that's the case. So it looks like our mortgage and our principal reduction are even all 5 years. And here it is. See, our expenses are pretty big the first couple of years because we have some leasing that we've got to deal with, right? We're paying some leasing commissions. I would assume that we're probably going to end up paying similar commissions across the board, depending on how you decide to structure all of these leases. So it might be prudent to carry that over and continue it on. So we just copy that formula and maybe just say, you know what, also in year 3, we're going to have roughly the same amount in expenses because we're still going to be signing another lease. All right. Now, that deal still works. I mean, that's still a really good cash on cash return, and we're tripling our money. But what if our current tenants are stuck in there at $25 a foot? Will the deal still work? $1,250,000. I mean, we're all in at $280 a foot. Relatively cheap, right? We don't really have any expenses. So at that point, we don't hit our debt service coverage ratio until year 4. So now we're not really cash flowing all that much. And it's a decent deal. I mean, it's still almost doubling your money over a 5-year period, right? Remember, we want that number to be at 100% if we're doubling. So it's a 15% annualized cash on cash return. So not bad. I don't feel good about lowering our cap rate on exit, so I'm going to leave that there. I don't feel good about much. So, I mean, here's the thing. Like, if you can get this, Michael, for $1,250,000, and you rent it at anything above $25 a foot, it should work. Now, here's the thing. What if the seller comes back and says, I want $1,500,000? At $25 a foot, you're going to be losing money for a few years, and you lose money overall. So you don't really want those numbers to be negative. So now we have to start really getting aggressive on our lease up. If we have to pay $1,500,000, maybe we have to blend out $30 a foot as fast as possible. And at that point, then we're doubling our money over a 5-year period. So, Michael, what I would say, if a deal that you're actually interested in doing, up to $1.5 million could work for you, man. Just depending on how you decide to approach it. So, guys, what I would do if I was in this situation, if this was an actual off-market deal that I was analyzing and I didn't have any information, next step would be, okay, I feel confident in my approach here, right? We looked at comps. They're somewhere between 40 and 50 bucks a foot, seemingly. I can make the deal work at about 30. So that to me says, hey, there's probably a deal here, okay? I don't know those exact numbers yet. I still have to find that out. I would then work on putting it under contract with the seller and getting access to the current leases, right? That will give me more information to button up at least my first year, depending on how those leases are structured. Then I'm calling leasing brokers in the area. Michael's a broker, so he probably knows pretty well that we'll lease for 45 to 50 bucks a foot. So he may already know that for sure. And if you're able to get anything over 30 bucks a foot, even if you have to pay upwards of $1.5 million, then the deal starts to really, really work. So start calling your partners, start calling your lenders, and make that deal work. All right, guys, appreciate y'all for joining me here on day 24 of 30 Deals, 30 Days. If you want to join the challenge and you haven't yet, that link is in the description below. Go to CREcentral.com/30 Deals, 30 Days. I'll see you guys tomorrow.